Well, the baby boomer generation only makes up 20% of the U.S. population, but owns a significant portion of real estate across the country. With fewer family-sized homes up for grabs, younger generations are finding it harder and harder to own a home, especially first-time buyers. So today we're going to discuss all this, and joining us in studio this morning is local real estate expert Adriano Tori. Good morning. Thanks for being here with us, Adriano. We haven't seen you in just a little bit.
Good morning. Thanks for having me. It's been a little bit. Yeah.
It seems like the right time to talk about real estate. So according to the National Association of Realtors, the median age of first-time home buyers last year was 38 years old. Do you believe things are out there that can help people buy homes at a younger age? I mean, 38 is not old when you're looking at the longevity of life, but when you talk about buying a home, some people finish school and they want to get right into that.
Exactly. And there is another statistic actually that we have to factor in as well, and that is that about 43%, almost 50% of all baby boomers, they are saying that they wish to stay in their property, and more likely they will not sell their home in their lifetime. Now, with that, one of the main drivers behind it is that most of them do have a mortgage that is paid off. Others do have a very low interest rate, so with very little incentive to move on to another property. You also have like the affordability, right? You just mentioned like for younger home buyers out there in the community, which also it's more of a detriment to the incentive of wanting to move to a different place or even downsize, because the affordability still is an issue in the area. And you know, we are in the Pacific Northwest. People just love the area, the community,
the clean
air, right? And they don't just want to let go of their home, you know, easily. And so they will feel more inclined to stay. And that is one of the things that is adding to the lack of inventory, especially for the younger generations. And now that you're bringing up 38% of those, you know, about 38 years of age when somebody breaks into home ownership, that becomes a little bit frustrating, right? For a lot of people, especially they're graduating from college, they get a new job, or they're transferring to Seattle, and they want to see, you know, what the odds of breaking into homeownership will look like. But for the most part, there are options out there. So, you know, we see the light at the end of the tunnel in terms of like what options they could tap on to be able to break into homeownership.
Okay, so let's talk about some areas across the state. So monthly rent, I've noticed this a lot, and I hear complaints, is more expensive than mortgage payments, yet some renters still don't qualify for loans. So that can be discouraging to people, you know, from when they're trying to buy a home. What advice would you give to someone who finds themselves in that predicament or situation? Because people move here maybe from somewhere that's less expensive and they think, oh, I'm going to buy a house, and they say, oh, I can't buy a house, and they look at rent, and rent prices have skyrocketed.
Yeah, so first we need to sort out the financials, right? That's the most important thing. So having a good scope of what we're able to afford, and also being able to be comfortable with the mortgage payment, it will be, you know, one of the first steps that would help us bring that confidence and clarity into that decision-making process. The other part too is that there are options out there where you could work with a mortgage or a bank where they could defer the interest rate that is being assessed on the mortgage over the early period of that mortgage being lower, and then subsequently it comes, you know, it starts like increasing based on the market rate. Another option there is that there are some banks that they will allow you to readjust the rate without having the need to refinance. And so early on, it might be a little bit of a sacrifice for certain home buyers out there, but then they do have the option to save thousands of dollars on being able to adjust the rate once a year, without having to pay, you know, that excessive amount of money when they look into another lender to buy the loan out. So those are some of the mechanisms that are out there that is helping, you know, the younger home buyers bring into home ownership.
Okay, so maybe that's how they can save just a little bit. And I mean, just putting aside just a little bit each month, it seems harder and harder to do, especially with inflation here and everything getting so expensive. Let's talk about interest rates before we wrap up here. That's something that I think people are looking to, and gone are the days of 2.7 interest rate. And if you think about it, you push up to 7%, and you can't afford that house that you could afford at 2.7. So where do you see this going? It's maybe moved down just a small amount.
Right.
What's going to happen with the feds?
Yeah, you know, so one interesting trend that is going on right now in the market is that as the interest rates have still remained very stubborn, into the high 6, low 7s, we're seeing more properties staying in the market a little bit longer, so over 30 days. And so that brings a leverage to buyers to being able to negotiate, prices down, or even negotiate larger concessions. And they can use those concessions to lower the interest rate by buying points. That's one part. And then another one could be like projecting, potentially, how long the property may be on the market, the one that they are targeting, and then using that amount to be able to bring that price closer to what will be more of like making them feel very comfortable with mortgage payments.
Yeah, comfortable and mortgage payments, two terms that may not go together right now, but hopefully over time we'll get back on track. Adriano Tori, thank you so much for all your tips and advice. I'm sure there's so much more you can give us, but we've only got a short time here, so we'll look forward to our next visit.
Thanks for having me.
All right.